and welcome to Idlc's presentation for the third quarter of 2020. I'm Sam Chaudhary and I'll be your host for the session. So, quick introduction to the panel. We have a little change here. Mr. Zubair Alam, our previous head of strategic planning, has departed and he has emigrated to Canada. So, in his place, we have Mr. Syed Javed Noor. He's a general manager and he's also the head of strategic planning at Idlc now. Then joining us, we have our group and welcome to Idlc's presentation for the third quarter. Of course, we have with us our group CEO and managing director, Mr. Arif Khan, whom I'd like to request to start the presentation. Off to you, Arif.
Okay, thank you, Sam, for nice introduction. Good afternoon, good evening here, people who have logged in from Dhaka. Good morning to the people who have logged in from North America. And wherever you are, greetings from Idlc Finance. As Sam was mentioning, I would like to introduce our new head of strategic planning, who is also looking after the SME business and many other initiatives of Idlc, including venture financing as well. Syed Javed Noor, he has extensive, almost 20 years plus experience in the commercial banking and finance companies. He worked in Idlc for almost 10 years in different stints, and he also worked in HSBC for another 10 years. So I'm really happy that Javed has taken over as strategic planning, although we miss Zubair Alam. Anyway, let's come back to the business. So this is our third quarter financial performance declaration or analyst call. And I would like to invite all of you to run through our presentation here so that we can gradually see how it evolved in the last 3 months. Generally, one thing I'd like to mention here is that overall business situation was very challenging in terms of making new disbursement. Because COVID-19 has actually had a huge toll in our overall operation during March, April, May, June, July. From July, we started slowly moving into the business, and August we got some peak. But from September, October, we have seen significant improvement in our business activities. But initially, the collection ratio was very, very poor. Later on, it kept on going up, and now it's almost 85 to 90% level. In certain cases, we are getting the current due paid by our customers. And meantime, government has come up with lots of stimulus package for the SMEs and the corporate lenders. And Idlc has been one of the participating financial institutions in that endeavor. And government also declared a debt holiday for almost most of the clients, except for certain exceptional criteria. And as part of the debt holiday, we actually deferred the debt payment for 6 months, 9 months, depending on the client's overall non-payment scenario. So we also think that government has done the right thing. In many countries, even in India, they have given debt holiday. And this is not a normal business scenario. In a normal business scenario, what happens that what we have seen in the last if you take last 10 years average of Idlc's NPL ratio, it's around 3%. And we believe that Idlc's portfolio quality still remains the same. But the question is that when COVID came in, lots of business people actually shut down their business operations, and they started failing making payment. And this, I think, is not a regular default clients. These are situational events, and this comes once in a century. So maybe what will happen that every client, most of the clients will need extra 6 months or extra 12 months to readjust and repay the loan. What happens that when you give a loan and collect the money, we go for a fresh disbursement. So it's like the same thing that they were not able in certain cases paid the money on time. So if we extend another 6 months debt holiday and increase the term by 6 months, that means these clients, we believe that will become regular. But of course, we have to see how the COVID situation unfolds in the coming period, because we have seen that in Europe, the second waves are coming up. In Bangladesh, Bangladesh government and the people at large actually managed the COVID season relatively well. Our overall disasters numbers are not that disastrous. It's actually very manageable situation, and everywhere I see now people are coming to the business very robustly, coming back to the business. So that gives us a lot of hope about the recovery of Bangladesh. Another scenario is that liquidity. Initially, the liquidity was very tight, especially in certain non-bank companies and certain banks. The liquidity was very tight, and the overall market liquidity was not very normal. But it started improving and improving in the backdrop of huge remittance. We've just seen the latest report that from World Bank that this year Bangladesh remittance can be $20 billion, which is last year was 16 billion. So it's a huge growth, and Bangladesh Bank also purchased certain dollar to give support Taka, because Taka value was appreciating. Market deposit growth was almost steady, around 13% deposit growth rate. Overall credit growth rate was also not that bad. It's around 10.5%. And since the private sector demand was falling because of the COVID situation, the liquidity was improving, and actually we have seen a massive decline in the yield of the corporate treasury bonds, ranging from 180 basis point to 350 basis point, even higher actually now. Now central bank is again looking into that, how the excess liquidity can be mopped up. So that actually helped Idlc to really take the overall situation in its advantage and make some investments in treasury bonds. And meantime, the overall banking industry also reduced the deposit rate significantly. And Idlc is also not an exception. Currently, we are taking deposit possibly at 5.75%. So kind of to 200% to 300%. Decline in certain cases, the deposit mobilization. So that's the overall scenario. We are still recovering from the COVID. Market is abundant with liquidity. On the other hand, let's move to the next slide. On the other hand, we have seen that the capital market actually recovering significantly, almost more than 20% recovered from the last year's position. Overall turnover has also increased from the last year's average. So our market share has also increased. We are now more than 4% market share. Earlier it was 3.5% kind of a thing. So in the capital market, we had certain unrealized loss situations where we have taken certain provisions. So when the market went up, we actually rebalanced our portfolio, took some profit, and also our provision requirement came down significantly. So from brokerage commission, we also increased our brokerage commission. So including Idlc investments, everywhere capital market, we have seen certain significant improvement in our performance over the last 3 months' time. Although things are very much under control, but there is still fear that the economy may not grow the way it grew in the last decade. But still, the government estimation is that it will grow more than 8%. There are other donor agencies where somebody is talking about 4%, somebody is talking about 1.2%. But still, there is a general consensus that Bangladesh economy GDP will still continue to grow, where we have seen other regional countries has a negative GDP growth rate. So from that point of view, Bangladesh business scenario and the confidence index is still positive. So we are hopeful that Idlc will definitely take its position amid that positive mood in Bangladesh. Now come back to the numbers that what we see in the last 9 months. Our Idlc Finance standalone profit grew by 28%, and if we add the capital market 3 subsidiaries, that's also 28%. Idlc Finance profit was 1.51 billion local currency BDT, and the net profit of consolidated net profit was 1.61 billion. Although our customer loan book has a degrowth of 6%, had a degrowth of 6%, it's because we were actually very cautious from April, May, June, July. These 4 months we actually did not. Our office was almost shut down as a government circular, and we are also very cautious that without looking into the situation, we will not go for aggressive lending, and that actually paid off. Idlc's I hope that we will maintain our NPL ratio, collection ratio, and disbursement growth rate prudently, so that we can create more value for the shareholders and other stakeholders. Non-performing loan situation has improved, but although everybody knows that because of central bank circular, we cannot classify anybody who has was defaulting to pay 5 months, 3 months, 4 months, 6 months. So that I discussed initially, that there was a general debt holiday, and it's not unique in Bangladesh. It actually happened in other many countries. And as I said, that once we give some time to the clients, I'm sure that they will readjust their cash flow and continue to pay. And we have seen in the last 2-3 months are almost 95% plus customers are actually coming back to the business, and there is a sign that they will continue to pay our money. Our total deposits grew by 3%, but most importantly, the total deposit includes the institutional or bank deposits, but the retail customer deposits increased by 10%. We have to remember, this is not a commercial bank. This is a non-bank finance company, and we cannot take current account and savings account. And there was a lot of discussion in the media regarding some of the NBFIs who were not being able to pay the depositors' money on time. So in that environment, many NBFIs actually lost deposits. In that condition, amid the closure of the office for 3-4 months, Idlc's deposit grew by 10%. My entire team members of the liability and my general colleagues also went on significant drive in deposit mobilization, and that actually helped Idlc to recover its overall business situation and the profitability situation, because people had a lot of confidence in Idlc, because they think that Idlc is a safe custodian of their money, and we are continuing to see that more and more money is coming to Idlc, and our liquidity is one of the most comfortable at this point in time. Now, if we look into the breakup of the consolidated group profitability, Idlc Finance made 1.51 billion, just 28% high compared to last year same period. Idlc Securities 49 million, which is and Idlc Investment 71 million, declined by 15%. Idlc Asset Management, last year loss was 17 million, this year loss is 24 million, slightly increased. So our consolidated profit 161.61 billion, which is 28% high. So as I said, that once we go to the detail, we'll see that our net interest income and fee income and other margins slightly declined, but the real income happened from 2-3 sources. One is the investment income. As I said, that we actually invested almost, we mobilized deposits significantly during this pandemic, and when we saw that there is not enough customer demand from the loan, we invested heavily in the government treasury bills, and yield was very high at that point in time, and we had kind of a view that yield will come down in future significantly, and that really happened. And we had offloaded some of those positions and made a huge amount of capital gain. Also, from the capital market, we could our portfolio value increased significantly compared to the last June end, and that released our provision, because when there was a unrealized loss, we took provision, and when there is a reversal, that provision release. And we also got some reduction in our operating expenses, although not significantly. So although the net interest income and fee income are marginally less, but because of investment income, capital market rebounding effect, and the operating expense reduction actually helped us to maintain our profitability and even grow. Let's move to the next slide. So now let's look into the numbers over last year same period. So our loan and advance grew by 0.1%. As I said, that our loan book declined by 6% compared to December. But if you compare last year September to this year September, it's almost remained same. Our deposit increased by 10%, net interest income decreased by 8%, as I mentioned just a few seconds back. Fees and other income decreased by 23%. And look at the investment income, from 31 million last year, it moved up to 467 million. So that's the major changes in our income statement. Operating expense, operating income almost remained same, 1% growth. Operating expense, we saved around 2%. Operating profit increased by 3%. And provision and loans and investments, we could see some downwards effect. One is that there are three items in the provision. One is that capital market release, which happened in any case automatically. If the market price goes up, we release provision. If the market price goes down and there is unrealized loss, we take. So last 6 months we took lots of provisions which we could release. So that's a normal business release. And since there is a 6% portfolio degrowth, so there is a general provisioning also linked with the overall portfolio, and a specific provision. We followed the Bangladesh Bank guideline, and of course Idlc. While preparing this, we were a bit more prudent. We were a bit more cautious in taking provision. I think that we have kept sufficient reserve for provision for the future. And if you look into the profitability, also as I said earlier, that it's around 28% higher over the last year. If you look into the quarterly lines, I think it's a very crowded line. But if you can just look into the last quarter or the compared to the last quarter of the last year, you will see almost everywhere net interest income increased from the last quarter, but from the last year's fourth quarter is declined. Operating income increased, as I said, the massive operating income came from treasury operation. Operating expense a little bit higher. Cost income ratio declined this quarter to 35%. And net interest income increase basically happened because of we could get some extra margin because the deposit rates are repricing at a lower rate. So margin was assets repricing was not happening that frequently, so we got some extra margin. We could settle some of the big problem cases, and of course the restructuring of a good number of clients because of the pandemic also helped us in also reduced our net interest income to some extent. Operating income still we can see that sizable amount of growth because, as I said, from investment income treasury bond, and OPEX I think it's more or less similar from the if we compare to the third quarter of last year, more or less similar. It was 632 million and here it is now 606 million. Cost income ratio last quarter it declined significantly because top line increased significantly, but if you look into the 9 months cost income ratio that we will show later, I'm sure that you'll see that trend. Balance sheet, our balance sheet is now 125 billion taka, total size, loans and advances around 87 billion, term deposits 79 billion and non-bank deposits 69 billion. So as I said that most of the statistics I've already discussed, but what we can see that balance sheet size grew by 9%, but loan book size declined compared to same period last year. Term deposit increased by 5% and the non-bank deposit increased by 8%. So I think that's most of the ingredients of these changes I have already explained. Composition of our total loan book size, as we can see every year, kind of similar situation. Our SME loan book last year it was 34%. It is now moved to 36%. Our consumer around last year it was 32%. Is now 29%. Our corporate consumer is now 35% and corporate is 29%. So it's like kind of split almost around 1/3, 1/3, 1/3. So, but recently we can see that a shrink in our corporate loan book size because of huge competition in the market from the commercial banks. Since the liquidity is very, situation is very fluid and liberal, so banks can offer them at a lower rate. So that's causing some books are shrinking because of the loan taken over by other banks. So if you look into the SME loan book, it's now around 31 billion. Consumer loan book is around 30 billion and corporate loan book around 25 billion. NPL, as I mentioned earlier, NPL reduced, but we have to wait to see actual NPL maybe a couple of months time. Because a good number of accounts restructured, debt holiday has been given, so that will happen to the entire industry. But I'm always confident and hopeful that IDLC's loan book quality is reasonably well, and that is being tested in the last 10 years or 15 years average. So and I don't see that very significant number of accounts will just jump in at any point in time. Look into our shareholders return. I would say that looking into third quarter's numbers standalone will give us kind of a distorted picture, because in one quarter we got more than 46 million taka investment income. In one quarter we got more than 150 million extra income from capital market. So this was a outlier quarter, but if you look into the last 9 months average, return on asset IDLC should be 1.77%, and we have seen this is one of the highest in the entire banking industry of Bangladesh. And the return on equity of the last 9 months average is 15.2%, which will be also one of the top 5 return on equity in the entire banking system in Bangladesh. The reports which so far published, we have certain research on this. Earnings per share is around 4.27, and our book value is almost 38 taka. In terms of capital adequacy, as we have been talking in every quarterly earnings, that IDLC has got a comfortable capital adequacy ratio, group-wise 7.8%, and the standalone basis 14.8%. Our loan-to-fund ratio is 77%, although regulatory limit is 95%. So we are very comfortable in terms of our capital adequacy and in terms of our liquidity. Meantime, IDLC Investments, our merchant bank wing, has been a major issuer, major lead manager, investment banker in big IPOs in the country. IDLC Investment has been adjusted the best investment bank for the last consecutive 2 years by Euromoney. So we just got approval from the regulator as an issue manager of one of the largest IPO in Bangladesh market, Robi. Axiata, this is the second largest telco company in Bangladesh, almost 50 million customers. So we hope that will increase our branding, and market depth will also increase. Also, meantime, we got another IPO approval, one of the leading civil construction engineering firm, Mir Akhtar Hussain, very respectable, very reputed firm. The bidding has been completed. We are expecting that the final IPO will start very soon. Meantime, our deposit products, we are launching. We are in the test phase of launching our online deposit products, so the customers can completely do the deposits through their laptops from anywhere without any physical intervention. We are also introducing some technology whereby our mutual fund investors can completely onboard to our mutual funds through technology without any physical intervention. We are also in the process of introducing e-loans in collaboration with some startup in tech startup companies, and that's one of our team is working on that. Other than this, also we are doing a lot of technology initiative. I would like to ask our strategic head, Mr. Javed Noor, to shed some light on this.
So thank you, Arif. All of our tech projects that we are doing now is to basically increase, freeing up the capacity of our colleagues and increasing the productivity. All of our sales colleagues and CRM colleagues are now basically have handheld devices given from the office, so that they remain mobile and can work. If they don't need to come to office, they don't need to come to office. And accordingly, while they were in office, they were basically using service requests through their desktop that we have incorporated in their mobile, so that for no reason they need to come to the office. Also, what we have done, we have incorporated the online learning portal in the same mobile app. So our objective is to basically add more and more things into this particular tab, so that the colleagues can remain mobile and work. And also what we have done, we have enhanced our deposit payment module. Earlier, the part of the deposit payment module was outside our core banking system, which basically exposes us to some sort of operational risk. So we took a project, and now it is embedded into the core banking system, which has basically freed up some operator's job in our back office. And the last thing that we have done is basically the credit administration department used to print all the documents for loan execution separately from the OCAS. Now, all these documents which needs to be executed by a borrower now being printed from our loan origination module. What it has done, it has saved cost of the operators at the operations level. So whenever credit analyst is inputting the relevant information, all the legal guys are inputting information into the online credit system, and the documents are being automatically printed at remote places wherever we have our guys with a handheld device and a printer. So they can take the printout, connect, execute, and scan it. So we have made it efficient. And we have also automated our dividend payment. That's all. Over to Arif Bhai.
Yeah, thank you, Javed. So now I think before going to Q&A session, we'd like to say that our going forward strategy, Mr. Javed Noor is here, our all other business heads are all taking one target that we need to pick up in our disbursement, in our credit growth. And also we have to constantly work on more collection to regularize some problem accounts. And of course, we need to constantly work on our capital market situation and the investment books to gain more profit in the next quarter. As we have been always talking about, that technology will remain our core focus. We are now implementing the customer relationship management software, CRM software. Full swing work is going on. I think we can hope by middle of the next year we can see the result of that. And of course, our brokerage commission and asset management companies and new initiatives will definitely add to Idlc's endeavor to increase or diversify its profitability verticals significantly from 2021. So I think those are the basic presentation of Idlc Finance and the group companies. I'm sure that you must have some questions. So our CFO, Mr. Masud Kuri Mujumdar, Mr. Javed Noor, and I'll be here and happy to answer those questions if you have any. Thank you very much.
Thank you, Arif Bhai, for your wonderful presentation. We have a few questions. Our first question is asking, what is your expected interest? What is your expectation for interest rates in the coming quarters?
The interest rate depends on, I would like to say first shed light from our Javed, who is also looking after the treasury. So Javed, can you say something?
After every crisis, what we have seen, the central banks try to stimulate the economy through supply of money. Whenever you supply the money, the interest rate has to go down. What we see in the next 2-3 quarters, probably interest rate will be low. And what we have also seen, the record remittances, which is basically releasing local currency, which is increasing the availability of local currency. So there should be increase in deposit, and demand for lending probably will take some time to pick up. So in the shorter term, what we see that interest rate will remain at low level, probably third quarter, end of second quarter, third quarter, with the pickup of demand for lending, that may go up. Over to Arif Bhai. I think
essentially what you are saying, that interest rate will remain like current situation for the next 2 quarters. Yeah.
Yeah, that's the thing.
Okay. Yeah, I also believe in that direction. Maybe slight increase, but it will remain kind of same.
Thank you, Arif Bhai. Our next question is on the same line by the same user actually. It asks, what is your expectation for exchange rate in the coming quarters?
Yeah, Javed again. You are an expert on.
As far as the exchange rate is concerned, if we look at our reserves, it's now at historical highest level. And the remittances, which is the mainstay, it is again growing and at an unprecedented level. And with the government incentive to channelize most of the remittances through the formal channel, that flow is expected to continue unless something happens, mass job losses takes place. Um, it needs to be seen how our export does basically in the first quarter or second quarter of 2021. That probably will determine a lot about the exchange rate. As of now, it's difficult to predict, but I'll be cautious that probably at this level, the exchange rate may continue up to first quarter. But post that, there are a lot many variables, and it's difficult to predict at this point in time.
Right.
Thank you, Javed bhai. Our next question is, what is your lending strategy for next year, and what is your current capital adequacy ratio?
Yeah, we have already mentioned. Masood, can you say repeat that capital adequacy ratio currently?
We have already mentioned in our PPT. I believe we have already mentioned, but again, I can repeat that. On consolidated basis, is around 17.8%, and in solo basis, it actually 14.8%.
Great. And in our lending strategy, I think that when the situation is improving, we see that situation, business environment is coming up. So we will go all out to book our new assets. Of course, keeping our credit standard intact, because Idlc has been always cautious in maintaining its overall collection ratio and NPL ratio. So we hope that our SME, we just got the information that this month we had the highest SME loan disbursement. So that's how the consumers are coming up. Corporate, we hope that corporate will also come up. So our lending strategy would be always to maintain minimum average credit growth rate in the Idlc's loan book size, or what we have seen in the last 10 years, if not more. And of course, keeping our credit quality unchanged.
Thank you, Arif bhai. Our next question is regarding government securities. What is your strategy on investments in government securities, and how long do you think you'll be able to continue this profitability in the coming periods?
No, investment in government security is a continuous process. But the question is that, the investment in government security will remain in our book almost forever. So sometimes we will sell, sometimes we will buy, sometimes we will gain some capital gain, sometimes we will rely on the interest income. So I think this is a perpetual position. The question is that whether we can make money every time. That depends on our entry time, and that also depends on the overall interest rate structure in the country. So we hope that whatever investments that we have made a couple of months back, that will possibly give us some more profitability. But I'm sure that Idlc will continue to remain active into the bond market, government bond market, as part of our liquidity management.
Thank you, Arif bhai. Our next question is regarding COVID impact. It's asking, which portion of your portfolio has been most affected due to the COVID situation?
Yeah, Javed, can you shed some light on this?
I would say, as of now, what we have seen, there is no specific segment of business which has been impacted most. The best is the home loan part, where the collection ratio has remained almost unaffected. On the SME, yes, we had initial dips, but we worked very closely with our customers. Very interestingly, even during June, July, the collection ratio from the SME customers before restructuring was around 70 to 75%. So when we assess a customer, we assess many aspects of the customers. One of the asset is basically how long he is in the business. That basically determines his flexibility, his adaptability to particular to his business. So what probably there has been 3 to 6 months delays for different customers in terms of interest payments, but the customers that we have seen, I don't think there will be much of an impact. Probably it will be spread over a period and not much of a loss. In the corporate portfolio, yes, they made some that fluctuated, but then again, we don't see the collection a significant difference in the collection ratio.
And I'd like to add some point with Zaved that I also think that there was not any specific sector or big cases where we can see that the customers are heavily affected. But of course, the SME loan books, they are definitely vulnerable compared to any other, especially compared to the consumer. So we need to watch them, their portfolio and the business cycles carefully. Yeah.
Thank you, Arif bhai. Our next question is actually pertaining to the SME portfolio. It starts with a comment. In this rate cap scenario, Idlc could have gone all out in SME lending as no bank is lending right now. Why have we not seen that?
Oh yeah, it's like you have to be always cautious about quality of the portfolio. I mean, if we want to disburse money, we can just start giving money and people will be lining up to take money. But the question is that everybody is cautious to see what is the outcome of the business scenario. So our business is not to lend the money. Our business is to lend the money and recover the money. Because we actually, if you have seen that our average return on asset in Idlc is 1.5% average last 5 years. So every 100 taka we make just only 1.5 taka. So in the process, if we lose 10% of the portfolio of bad loan, then there is no profitability. So our Manco and everybody was very cautious and that we will not go for indiscriminate lending. Also, there was not enough demand from the client side. And actually, April, May, June, almost July, these 4 months, business was almost shut down, and we have to think about that. In this year, 1/3 of our total time was gone. So we were cautious.
Thank you, Arif bhai. Our next question is asking, do you have any strategy to take advantage of the interest rate cap imposed on banks?
Sorry?
What's the strategy to take advantage of the rate cap which is imposed on banks?
David?
Yep. When it was initially there was a rate cap, we were all happy that we can go out. But if you look at the current deposit rates of all the banks, the cost of fund for the banks has now moving around 5 to 6%. At 9% lending, they're comfortable in lending. So there are plenty of liquidity in the market at a lower cost. So
I think so.
we need to find our piece of the cake, which is basically early origination before anyone reaches there.
Yeah, actually, I would say that government has managed it very well, because when the government was coming up with this single digit lending rate, we were very skeptical how business will get money or banks will do business. But now you see the deposit rate, although Zaved said 5%, but in many banks' cases, it's come down to 4%, because current account, savings account, if you combine all together. So all the banks are, most of the good banks are flooded with the liquidity. So 9% they can comfortably lend. So it's not that there is a lending cap for them, so they cannot, clients do not get money from them, so Idlc has got a huge opportunity. I don't think the situation is like that. We are struggling to give money to our corporate loan books. We have just today, I have seen one client which has got 800 million taka limit, and he has only taken 20 million. Why? Because he thinks that although Idlc offered them 9.5%, they said that there are banks which can offer them 8.5%. So it's not that comfortable actually. Banks has got lots of money to give within that 9% rate.
Thank you, Arif bhai. Our next question is basically questioning the sustainability of our current performance, and it asking, what do you think, whether is it realistic in terms of asset growth, ROA and ROE over the next few years?
Yeah, of course, this is a very interesting question. Everybody investor will ask for this. I think that no one should expect anything in any business that it will be always sustainable. One quarter to another quarter to another year, every situation depends on the business environment, business dynamic situation. And some year profit will be high, some year profit will be low. If you look into Idlc's profitability 2017, it was almost 250 crore taka. Then it came down to 217 crore taka. Then it came down to 190 crore. Then it came down to 150 crore in the local currency, or 1.5 billion. So this is how in certain year it increases, certain year it decreases. But the question is that whether the management is transparent with the investors. I think Idlc is one of the unique organizations which believes that we do not give any point in those kind of issues where people call it earnings management. We don't think that our job is to maintain the earnings on a consistent basis, that every year earning will grow and sustain. Whatever the actual earning, we'll report to our shareholder. It may happen some year it will be good, some year it will be bad. And when the management really disclose the books in that way without managing it, that is the real quality of the management. And we can tell that earnings management is not our cup of tea. But anybody can understand that this one-off treasury income would definitely will not be there for every year. So I'm sure that you can get the clue from my answer.
Thank you for your answer, Idlc. Our next question, hopefully this will be the last question, is regarding liquidity. How long do you think this liquidity situation will prevail, and when do you see the interest rate moving up?
That our strategic head already mentioned. So I think that when the demand for loan increases, maybe from next year, third quarter, when we have to watch and see that how the second wave of coronavirus actually managed, or whether it comes in Bangladesh or not. But I don't see that in next 2-3 quarters significant interest rate rise. What is your opinion, our CFO Masood? What do you think?
Actually, as Javed bhai already said, like interest rate prediction depend on many factors, like and plus added one is the COVID impact. So altogether, remittance, private sector credit, demand, and all together it will impact the movement of the interest rate, depending on demand and supply case, something like that. So to me, it's may June next year, maybe you can see something, I guess.
Increase in interest rate, I think.
Yeah.
Beyond that, before that, it will remain almost similar. Yeah, that's also our prediction.
Thank you, Majumdar bhai, and thank you, everyone. With that, we would like to actually end our webcast for now. And I'd like to inform everyone that all of this presentation slides, as well as our financials, have been uploaded on our website. So feel free to go there and download them. Thank you.
Thank you, Sam, and thank you, our group CFO Masood and strategic planning head Javed, and others, viewer and people who connected here, analysts. We thank you for your time here with us at Idlc. See you next time.